Good morning. Happy Wednesday. Let's get started.
Welcome to the show, it's Mortgage Talk. Grab a coffee, sit, and let's unlock the dreams you've got, the place you crave. From the front porch swing to the hidden cave. Talk about your home, talk about your plan, talk about the future where you'll stand. Your mortgage, your dream, your story to give. Let's talk about the place where you want to live. Got questions? Here's the place to be. A TikTok live mortgage jubilee. Fix or float, we'll break it down. From city lights to your small town.
Awesome. Hey guys, happy Wednesday. Hey, good to see you, Jessica. Good to see you on here. Hopefully you can hear me. Just wanted to wish you guys happy Wednesday. My name is Kenny Murden. I'm newer to TikTok. I say new to TikTok, but been on now for a little over a month. So I'll say newer to TikTok. Not new to lending. However, I've been lending since 1999, and I am a good resource for real estate agents and loan officers. I help them structure the deals that they have. You can't hear me. Okay. Well, let me try and increase my microphone. Let's go primary microphone. Let's see, audio, general settings, default. It's got the right one listed. Well, that's not good. So, what do we got? Oh, now you can hear me. Okay. Well, I didn't change anything, so maybe it's your phone. If anybody else cannot hear me, let me know and I'll pause the show and I'll instantly go back in to try to fix the problem. But anyway, so as I was saying, my name is Kenny Murden, newer to TikTok, not new to lending. I've been lending since 1999, and I've been a really good resource for loan officers and real estate agents to help structure their deals. So if it comes to any kind of issues that you're having regarding lending, real estate in general, I am a fantastic resource to help you answer any questions that you might have for you and your family. If you guys are thinking about buying a house, if you're thinking about refinancing, happy to help you through it. And also, I'm really curious to learn, what is holding people back from pulling the trigger and buying a house? A lot of times there are self-inflicted hurdles that we have where we just think we can't and we really can. Maybe the case is you applied with a bank or a credit union and they turned you down, or they said you're only approved for a certain amount of money, but if you haven't checked with a mortgage broker, then you might be able to get something done where you otherwise were not able to with a bank or credit union. So we're able to help more people approve. That's just a flat out fact. And we're also able to help people at a reduced cost, which what does that mean? If you have a lower interest rate, you can approve for more money. Also, we have programs where you can use more of your income towards the approval of a house. So if you've been turned down or if you've been approved for a lesser amount than what you wanted to buy, those are some things that we might be able to change for you right here today. So I'm curious to learn what other things might be holding people back from pulling the trigger on buying a house. Now, I was just talking with a friend this morning, and I'm not one of the real estate mortgage professionals that thinks everybody's a buyer. Everybody needs to buy a house. That's just not me. So, for me, I think it's a bit of a time commitment that you need to have in order to become a home owner, right? Versus renting. What do I mean by that? So if the time horizon, the level of commitment that you're looking to, move into your next place, if you're only looking to move into a place for less than 3 years, I would say consider renting. If you're looking at getting into a place and you're going to stay there for the rest of your life, or you don't have an endpoint, you're just going to you're settled, right? You have, this is the right town for you. Maybe your job is there. Maybe your kids are in school there. If that makes sense for you to stay there long term and you're renting, that's the situation where I'd say strongly consider owning a house. The reason being is you're going to build equity. The payments that you're going to be making are producing principal reduction on the loan that you have out on the house, and home values are still increasing year over year. So at the end of 3 years or longer, chances are when you go to sell that house, whether it's in 3 years or beyond, you're going to have a situation where you have a large sum of money coming back to you, versus if you move from a renting situation. Obviously, as we all know, we don't have anything to show for it. We've just paid all this rent and there's nothing there for you. There's no return of premium. There's nothing back. So that's a key difference. And there's more to it than that, but it's just, I like to simplify it down to, at the end of that time period, what are you left with? And so I've been fortunate enough to be able to sell homes for massive windfalls of being able to say, wow, here's some, return of the time that we were in this house. We've fixed it up. Sure, we've had some expense that way. We've obviously paid the monthly payments and everything. And so, but that's similar to renting. I know a lot of renters that, want to do a little fix up in their place, and they do little things. They get permission from the landlord. Hey, we want to have things a certain way. And they say, sure, go nuts, improve my house. Of course they'll say yes to that. So if you have a little expense on fix up and you have the expenses on the monthly payments, and then at the end of it, you're going to be getting a large sum of money back when you're moving again, that's the difference between owning and renting, in my opinion. If you have a different opinion on that, please share it in the chat, and we'll go from there. But again, my name is Kenny Murden. I am newer to TikTok, not newer to lending. I've been lending since 1999. Like I say, I've been, let's see, Austin says, does it make sense to refi into an FHA from conventional to pay debt off? Sometimes. So FHA will typically have a lower rate and a lower payment, but it also has mortgage insurance in it. So you have to look at what is the net cost. And conventional typically has a higher interest rate, but it, if you're over 80% loan to value and you're paying mortgage insurance anyway, when you're looking at conventional versus FHA, then you're more likely over 80%. You're more than likely going to make sense to go FHA if lower payment is your goal. Now, if that's not your, if that's not your goal, let me see, payment will go up about $400, but save about $1,500 in payment. So you're doing a debt consolidation refi, which means you're probably capped at 80%. So conventional might make sense with the mortgage insurance not being there, unless you have a lower credit score. So you have 485 is owed and the appraisal is 820. Score is lower, however. So yeah, because the score is lower, that's where it's probably going to make sense still to go with FHA, just because even with the mortgage insurance, the lower interest rate is going to be the clincher, right? It's just total cost. What's going to be the cheapest way to get this done? Now, one thing that we could look at is if your score is, let's say, around 600-ish or whatever it is, we could do a rapid rescore and see if we could boost your credit score very quickly So like if you're like me, for example, and you pay your mortgage, or not your mortgage, you pay your credit, you know, if you have a credit card that you pay off every month, but when you pull your credit score, it shows that you have a balance owing. Well, anything that you do to pay that down is going to positively impact your score. So if we just document the payments that you made to your credit cards recently and brought that balance down, that might be enough to increase your score. There's other things, other simple fixes if you have authorized users and things like that, where we're able to kind of like just make little tweaks to what you have going on in your credit, to, you know, almost artificially, but we just do it. It's called rapid rescore. We just run a report. It says if you do X, Y, and Z, rather than having this lower score for the purposes of this refinance or this purchase, we'll be able to use this higher score and give you a better deal on your interest rate and your closing costs. So that's something that I could run for you for free and show you, you know, what we're able to do there. If that's of interest, you know, I have a phone number at the top here. Just, you know, text rescore to me so I'll remember what we're talking about. And then I'll be able to take a look at that, get that quoted for you. And then if it makes sense, great. If it doesn't, no big deal. But ideally, you don't want to be paying mortgage insurance if you don't have to. Love the hustle, ripping the lives on December 17th. Let's effing go. Yeah, you know, the Christmas holiday, you know, spirit, whatever. I'm not in it this year. I got 3 kids that are in high school, going through some, you know, personal stuff that's got me totally out of the holiday spirit. I hope that doesn't ring true for any of you guys. I don't wish that on anybody. So I hope everybody is out there watching Elf and watching all the reruns of, you know, Miracle on 34th Street, and they're listening to, you know, all the Christmas tunes, and I hope you guys are in the spirit. I, however, am not. So I'm happy to be here. Doesn't even feel like a hustle. It just feels like another Wednesday, to be honest. But I appreciate you here. I appreciate the comment. And, you know, going back to the conventional versus FHA refi deal, yeah, it's rapid rescore might bring conventional back into play. Otherwise, FHA is a really good option. One thing that I do is I like to show people the rates and fees that we have to offer. I don't like to just say we're better. I like to show it. So I'm going to pull up what we call Loan Sifter. Loan Sifter is just something that everybody in the industry kind of knows. If you're a wholesale mortgage broker like me, you kind of know what I'm pulling up here, where I basically put your information in one time and it prices it out against, you know, over 100 different lenders. We have over 200 investors that we work with, that we're able to get you priced out with. But I do this at the beginning of every one of my shows because I just, for my own curiosity, I want to see what interest rates are doing. So I have one scenario that I price out every day. And so I'm going to do that right now. And that scenario is FHA, purchase, $400,000 house. And just so you know, if you have a scenario you want me to price out, I can price out yours as well. But we'll go 3.5% down with a 680 credit score. And say it's a first-time home buyer here in Texas. And I'll put fees in. What fees in means is the only lender fees that you're going to have are going to be discount points. And those are tax deductible, and that's the reason why I do it that way. But let's take a look and see what we're at here for pricing. And I'll try to blow it up so you can kind of see it. But as you can kind of see this list of lenders, I put in that one scenario, and it lists all of the different pricing from all the different investors that we have, and the cheapest one goes up on top. So that's really how that is working there. And looks like we're about the same as we were yesterday with, let me blow this up for you. So this 5 1/8 interest rate on an FHA deal, again, FHA has a little bit lower interest than conventional, that's costing 1 point. So about $4,000 on a $400,000 deal. And then yesterday, if I back this back out, yesterday we were par, meaning no points, no additional closing cost. Yesterday it was 5.5. So let me modify this again, and we'll look at 5.5. And yeah, we're right there again. It's the same lenders as yesterday's as well. That's interesting. So 5.5, no points. I don't know if you can see that. I'll highlight it there. But anyway, that's not always the case where the same lenders that were the best priced yesterday are the same ones that are priced today. They usually, it's just kind of like revolving chairs. So it's kind of interesting that the same two, but also the cheapest one where you're paying 1 point is not the cheapest one where you're not paying any points. So that's another thing. So it's like you change one little thing of a scenario and you're going to have a better option with one lender versus the next. And that's kind of the beauty of working with, over 200 different lenders is I find out what your scenario is, and then I can go price it out and give you the best deal. And so that's something where, we talk about if you go online, you go to the Googles and you start typing in that you want to, price compare mortgages, you're going to end up talking with a marketing company, not a lender. Right. And if that's the case, if you're talking to a marketing company, you are going to get blown up. Your phone is not going to stop ringing because they say they're going to give you like 3 to 5, competing offers. But what they do is they sell your information to 3 to 5 call centers that all have over 100, telemarketers that are all going to sit there and pound the phones to try and get a hold of you. So RIP your phone, your email, your text messages. Boom, you're just not going to be able to use your phone. And so what I'm saying is by working with a mortgage broker like myself, you're going to be able to get the same effect where we're going to be able to price out all those different lenders for you with one application, one credit pull, and nobody's going to be harassing you as far as, all the different phone calls and emails and text messages. If you like all that attention, if you're really lonely and you want to talk to about 300 or 400 people about mortgages, by all means, go Google, go talk to a marketing company. And that's just not my thing. Like, when I'm a consumer for, insurance or some of these other things where I'm going to price compare, and guys, oh my gosh, homeowners insurance is getting ridiculous everywhere, but here in Texas for sure. So I actually do price my stuff out every year, but I make sure I'm not going to talk to a marketing company. I'll talk to an independent wholesale insurance broker because I know that they can do the same thing where they're going to be able to price compare. They're going to be able to take my information one time and price compare it with all the different carriers out there and get me the best premium for the coverages that I have. And so, when I'm a consumer, I do it the exact same way. I make sure, because I've done it. I made the mistake. I put my information into the Googles and I got a marketing company. They send me to a bunch of call centers and it blows up my phone. And I'm like, guys, stop calling me. Like, it's just the worst thing in the world for me. It's so annoying. I can't stand it when my phone rings and it's not somebody that I want to talk to. So that's just a little bit about who I am, I guess. But anyway, going back to what I was talking about earlier, like I want to know what is holding people back from buying. Are you worried about credit concerns, down payment? You can't, calculate your income. Oh, I was telling the story yesterday because this just happened recently where there was a self-employed guy, nothing wrong with his deal whatsoever. Like total lendable guy, but he went to a bank that we all know I don't know if I can like say, the competitor's name. So I just kind of like changed the name to rhymes with Mel's Bargo. But anyway, so he's going there and trying to get a loan, and they calculated his income, and they just did it wrong. They just didn't know how to calculate self-employed income, and so he came to me thinking he was denied. He was under contract trying to buy a house, thinking he was denied. And I look at it and I'm like, nothing wrong with this income, man. You got tons of income here in your tax returns. Everything is good to go. Low DTI. I don't understand how that was the problem. And so we got him. He closed on time. Everything worked out great. But that's kind of like, another scenario out there was, not every originator, not every underwriter knows how to do their job. A lot of times they just, the easiest thing in the world is if you just have a W-2 and they're going to look, okay, you have a W-2, you make this per hour, you always work 40 hours a week. Like, I can figure out that math. Anybody can figure out that math. Your kid can figure out that math. They don't even need to be in this industry. But if you have, complicated taxes, let's say you have multiple streams of income, multiple businesses, and you got to kind of figure all this stuff out. Yeah, it takes a little bit more time, takes a little bit more gray matter to figure out that math, figure out, there's worksheets that we have to go through. It takes a lot of time and effort to figure it out. So, that's something that, somebody that is more seasoned and knows what they're doing, I was able to pull that through and say, yeah, you got enough income and away you go. But, so that's if somebody is, has challenging income. Let's say your income doesn't show on your tax returns that you approve for a house. What other options are there? Man, we got so many options. I mean, there's three factors that go into approving for a house. You need to have good enough income, right? And we'll put a pin in that and come back to that because this is the example I'm going to give. You need to have enough assets, enough down payment, and you need to have a good enough credit score. But if only two of those things are fantastic, you don't need a third, right? So in this case, where we're going to take income off the table, and we're going to talk about if you only have assets and credit. So let's say you have 20% down payment and a good credit score. You literally don't need to show a single document for your income, whether you're buying a house to live in or whether you're buying an investment property. And that's an important distinction because a lot of lenders can help you buy an investment property without income. They call it DSCR, or they'll call it no ratio, or they'll call it whatever. And they'll be able to get you into a house without having to document your income if it's an investment property, because that's outside of the Dodd-Frank rules. So that's like going back to the mortgage meltdown of 2008. If any of you are, old like me and remember that kind of stuff. But they changed the rules where you can't do stated income for the house that you're buying, because that's the Dodd-Frank rules and regulations. And so it's kind of a unique program where if you have good enough down payment and good enough credit to not have to document a stitch of income, and we'll be able to help you buy a house. Now, if you're going to do that, is the rate going to be the same as if you were able to document all of those three things? No. The interest rate's going to be higher. It's going to be reflected in what you're doing there. But, an example there where I helped somebody last year with that situation. She was not able to document her income whatsoever, not one penny. She wasn't able to document one penny, but she had, she had a really good credit score in this example, didn't need to have that good of a credit score. She had fantastic assets, so she put down the 20%. She bought like a $400,000 house here in Texas. And right now, she is refinancing that property because, number one, rates went down, but plus her interest rate was higher, right, because of the way that we financed it. And but now she can show her income. So she's getting, the current rates, the current best interest rates that are available, down from, an inflated interest rate for the ease of being able to get into the house. But this is the cool thing about it. When she bought that house, it was a motivated seller, and they sold it to her for around 400,000, but it was appraising closer to $500,000 at the time. And then she kind of came in there and did a little bit of fix up to it, and now she'd probably be able to sell that house for that 500-ish thousand dollars if she wanted to sell. So she locked in a really good price, right? She found a circumstance of a motivated seller, and that is a special thing when it comes to real estate, to be able to come in and find the right seller, not necessarily the right house, which happened to be the right house for her in the right area, whatever, just timing of it was perfect. But when you find that motivated seller that's willing to let go of a place because it might have been a little bit ugly, and then she put the paint on it, she upgraded the flooring, she did whatever that was causing it to not sell before, got that all fixed up. Maybe there's a little bit of other light repair that was needed in the house, and now she's got $100,000 in equity. That's fantastic. That's absolutely fantastic. And so when I'm talking to folks where they're talking about interest rates, I would say lock in the right price on the right house. That's way more important than locking in interest rates. Interest rates change all the time. And, I don't have a crystal ball, but I think interest rates are going to continue to come down from where they're at right now. So what that means for you is if it makes sense, like the gentleman that was talking about saving $1,500 a month, well, his payment's going to go up $400, but he's going to be saving $1,500 on the other debts. So let's call that a $900 per month savings. I don't care who you are, you're going to feel a $900 per month savings. So absolutely, like it's going to make sense in that circumstance to go ahead and take advantage of that right now, regardless of what interest rates do. Like if you're going to be able to save $900, do that right now. And the other benefits that you're going to get by refinancing is you're going to be able to skip 2 months payments. You're going to get the return of your escrow refund. If you pull up your mortgage statement and you see the amount that's in your escrow balance, that's the amount that's prepared to pay your taxes and your insurance when they're due. If you're escrowing for those expenses, then you're going to get that back, a couple 2-3 weeks after you close. So that's hey, good to see you 1%. Thanks for joining. But those are some of the benefits that are going to be existing there no matter what. So in addition to the skipping the 2 months, getting the return of that escrow premium, this gentleman's going to be saving $900 per month. So if that's a similar circumstance, absolutely do that, even if your interest rates are going to be continuing to go down. Because then guess what? If interest rates go down significant enough, what can he do? He can refinance again and save that extra $200 or whatever it's going to be next year, right? In 6, 8, 10 months, whatever it is. So, I'm just kind of a little bit down the rabbit trail on talking about that, where I got off the trail. Let's see. NDs says, if I have a job here but want to buy a vacation home, not an investment home, how much do I need? And it's in another state. So I believe the answer to that is 15% down. There might be some programs to get it down to 10%. But the other thing, again, where I was talking about motivated sellers. So if you find that house that you want to buy has a motivated seller, and the seller's willing to carry back some of that down payment, you can negotiate that deal. I will help you and your real estate agent negotiate that deal. It's in Texas, a lot of closing credits. Okay, so sounds like if you're having closing credits, that sounds like the situation that I'm talking about, where the seller is motivated to help you get that done. So that let me pull up. I want to make sure I'm answering you correctly here, so I can pull this up right now. Logging in. Let's let's see, where's my thing here? There it is. I have a custom GPT that I talk with here to go over all these different loan scenarios. Let's see. Minimum down payment for a second home. And this will tell me like which of my investors will do it. Yeah, 10 to 15% down. But what if, let's see, what is the max CLTV for a second home purchase? Same deal. So, yeah, so for second home, minimum down payment is going to be 10%. Let's see. SI says sitting at 2.625. Will we ever see threes again? I don't think so. I really don't. I think, best we'll see is maybe fours. But again, with the lower rates, if you're carrying a lot of consumer debt, I would have you focus on what's your blended rate on your total debt, and then look at a total debt situation. But if you don't have a lot of debt and you can keep that 2.625, dude, that's free money. So I would not sell that house without also selling that financing, right? Where you would do assign that debt to the buyer and charge a premium for that. So you get more sales price to give them that savings. Or if I needed to move, I would rent out that property and keep that as cash flow. So those are the few things that I think about when I think about that 2.625 that you have there. And then let's see, if I do conventional and it's just my wife on the loan, does my debt count too? No, you can, in Texas, I'm here in Texas, the only time you'd have to consider both of your debt is if it's a government loan. Conventional, she can buy it just by herself. It's 1 to buy, 2 to sell, just like any other state. So you're good there. Hopefully that makes sense. If you have any questions on that, let me know. Kian Malik says 350,000, 2 signees, 620 and 670 credit score. Debt is 700 a month in Texas. Kian, how much down? That's the question, is how much down payment? You can certainly get no money down. There's so many different down payment assistance programs there. With the 620 score, you're good, right? So if we looked at a USDA loan, we can go all the way down to a 550 score with no money down. VA doesn't have a minimum requirement. You can go no money down to technically down to a 350 credit score. And then at a 620, that's kind of where you need to be. I think 600 is where you need to be for no money down FHA with our down payment assistance programs. I'd have to check that. But definitely at 620, you're good. What type of financial instrument contract is used to carry back besides a note? It is a note. It's, it's just either it'll be a private. You could either do, I wouldn't do it as a land contract because you're selling it on a general warranty deed, same as anything else. So yeah, you would just do a promissory note. I can help you write that up. I mean, I've done a lot of them. So I would give you the document, but you would be the author of it. You would have to, check it with an attorney or accept it as is, sign it, and it'll be a legal document that can be recorded with the county. What credit platform do you look at? So we pull the same 3 bureaus as everybody else: Experian, Equifax, and TransUnion. The vendor I use is called Advantage Credit. let me know if you're looking for something other than that. We use FICO. I heard we were going to get Vantage, but it turns out that was just kind of like the same thing as the 50-year fixed whatever. It's just like a bunch of stuff that was coming out of the news that they're just like throwing stuff against the wall to see if it sticks. Nobody's using Vantage scores yet. It's all FICO. So for the scoring models on how that works. We really intend to sell our home, but we want to be approved before we move since we need to. Find a new job there in Texas. Use the word intend. That's really the loophole there. If your intention is to occupy the home within 60 days, it can be a primary residence. So that way you're going to be able to put a lot less money down. So definitely, I would say text me the word intend so I remember what we're talking about there, and I'll help you walk through that. I can certainly get that. I've fixed that for a lot of people, because if you're also going to get a better deal on the interest rate and the closing costs if you do it as a primary versus a second home. And if it really is your intention to lay your head on the pillow at night of that house as your primary residence, you intend to change your driver's license to that address. Like if you're going to live there as your primary residence, then you should not have to pay the additional down payment and the additional interest rate and closing costs as you would if it was an investment or a second home. And I'll argue that with you and for you against any underwriter. We just don't want to rent while finding a job. My wife is in dental. Yeah, and that's like honestly just what you're writing there is the same thing that we would use in the underwriting process. It's just called a letter of explanation. Circumstances are what they are. The underwriter just needs to document it in an understandable way. They put it into their loan package. It's saleable in the secondary market, right? We've just papered the file right here in the comments. It's perfect, and I'll help you do it. Bought in April with a 6.625 rate. Should I refi next year? Maybe. I mean, right now, I don't know if that's conventional or FHA. FHA, you're getting into the low fives right now. So you're already like in no-brainer territory, depending on the loan size, where it's going to make sense for you to just start saving money on interest, right? So, if it's conventional, I'd have to reprice it and see, kind of where it makes sense. And I need to know the loan size. It's conventional, 338 loan. Let's take a look, man. Let's just pull it up and see. So here I'm going to modify. I'm going to change this to conventional. And I don't know like what your house is worth. So I'm just going to be throwing some numbers in here and correct me if I'm wrong. But we'll change this to a rate and term refi. You said the loan amount was $338, and I'll just say that we're like, I don't know, 70% loan to value, which would be what? Oh, it doesn't let me go backwards. But for $351, appraisal came back $375, and that was bought in April. So we'll say it's about $375-ish still. I mean, they say nationally prices went up, but it was like 1 or 2%. So it should be about the same. So you're at about 90% loan to value on a conventional loan. That'll discount your mortgage insurance. Did you say what your credit score is? Let me scroll up here. No, I have 680 in there right now, so that's what I'll just stick with. Right now it's kind of middle of the road. And let's see, what else did you say here? Did you say what state you're in? Let's see. Yeah, Castillo, I just priced out at FHA 5.5 with no points. 800 credit score. You're a CPA Ohio. Thank you. So let me just look up an Ohio zip code. It can be any zip code in Ohio, so I'll just take this 43001 and throw that in here. And we'll go pricing. Take a look. So with a half point, which is kind of lower closing costs, we're at 6%. So saving you from a 6.625. So from there, I would go and just kind of see, what the cost is, what the savings is, and then we look at a break even. As long as you break even in less than 2 years, then it could be advisable to do it. The other benefits that you'd have are obviously the skipping the 2 months and getting a return of your escrow account. So if you pull up your mortgage statement, it'll show you how much you have available to fund the next property tax and or homeowners insurance that you have there. But yeah, saving about 0.625 is, that I see, when I was doing the call center stuff, we were refinancing people and they had a savings of a 1/4 point, and you're 5/8 of a point, a little over a half of a point. So is it going to make sense? It'll be allowable. How much money will that save you? Let's take a look. Pull up my, wants to look at my face. Go ahead, look at my face, computer. Just logging back in. But I would guess you're going to be somewhere around, $300-ish savings per month. So the thing that I would point out there is that's $300 a month savings in just interest is going to make sense for some people. It's not going to make sense for other people. So the tool that I use for that scenario then is called Rate Watch, meaning if you're like, hey Kenny, this is cool. I'm not motivated by $300 a month, but I am motivated by $500 a month. Cool. So then what I do is I put your information into Rate Watch, and that way you don't have to pay attention to it. I don't have to pay attention to it. The computer will pay attention to when is the right time for you to be able to save $500 a month. And then when the rates get to wherever that is, it alerts you, it'll alert me, and then we'll go ahead and get you wrapped up. But if $300 or whatever we're going to find here makes sense, see, my broker waives fees if I refi with them within 5 years. I'd only have to pay the title company fees. I would say do a comparison quote on that, because I waive a lot of fees for everybody. They don't have to be a repeat customer. So the difference being normally the commission people can charge close to 3 points that they make on every deal, and I only charge 1.5. So you're getting basically half off. And that's why the interest rates and closing costs that I quote are so much cheaper than other lenders that you might talk with. So I'd say compare, maybe they're cheaper. I make an income, can they undercut me? Absolutely. But that's just what I do. And basically the idea is, I come on here and I help a lot of people. So I'm not trying to, make my month off of one deal like a lot of lenders do out there. That's typically what lenders are doing right now. They're doing like 1 or 2 deals per month, and they have to make a living off of that. And some of them do that and they make a good living off of that. Where I'm trying to do more like 10 to 12 or more deals per month, and I don't need to, I don't, I do a volume play where I give people a good deal on their rates and fees and make less per deal. But let me pull this up here. Which file can I jump in? I can jump into my own. So let's do that. And we'll take a 338 loan amount. And I think you were 6.625. So your principal and interest on a 30-year, I'm assuming it was 30 years. Where's my calculator? It's 2164.25, and then let's compare that to 6% minus 2021.48. So it's only $137.77 per month savings. Does that make sense for me? No. Like, I'm not going to even notice $137 a month. Like, tank of gas, like, whatever. So if that's going to make sense for you, great, let's take it. If we're going to just grab that, better $137 is in your account versus their account, but does it make sense for me personally? No, I wouldn't. I mean, would I do that myself? No, I wouldn't. Don't let your client use Carrington Mortgage. That's actually really good advice. Now, for those that don't know, Carrington is a lender that will approve people where other lenders won't. So I would call them a lender of last resort. But yeah, they are not easy to get a loan. Even if you have a good lendable situation, they will make it a bad time for you. Yeah, absolutely. I agree with that. No, for real, they sent me with gun to my home and went into my home, had no court order. Holy shit. That's insane. Sounds like maybe they broke some laws there. So if that were me, I would be talking to a civil attorney, because if they did things that they tormented me for a year, that is called pain and suffering. And I would talk to a civil attorney about that, because that has monetary potential. So I've heard some really nasty stories where lenders were saying, even if it's in tormenting, right? So they had some guy just being an absolute jerk to them on the phone. And they said basically, even if they refinanced with somebody else, that they would go and purposely buy that loan so they would retain the servicing. So we're going to be able to torment you forever or whatever. It's basically the threat that was being made. I mean, insane stuff, man. Mean-spirited. They filed in court on November 24th. I have all the proof. I need help. I don't know a good attorney, but that's what you need. And so you had two attorneys that dropped me because they would not cooperate. So, and you're in Florida. I follow a real estate attorney on TikTok. Maybe she has a recommendation for you. But basically, you just want a personal injury lawyer that is going to want to throw 30% of whatever you get from them into their pocket, and then you get to keep 70%. But it sounds to me like there's been some overstepping, and the things that you want to say is they did these things and they caused me pain and suffering as well as potential financial loss. So you want to be able to list all of those things. I'm not a lawyer. I don't even have one where I'm able to point you in the right direction, but the person, just knowing your situation that you're in right now, is I would go to that gal that I'm following. She's a real estate attorney in Florida. She's got some fantastic content. I can't remember her name right offhand, but if you text me the word lawyer, after this, I'll see if I can look her up and send a message with you and for you, and see if we might be able to get you somebody to represent you. Yeah, I mean, it just, yeah, that's unacceptable. And guys, that happens all the time. Like I bank with Wells Fargo, and they get sued all the time for doing stuff. I'm like, you know, like, oh hey, did you know we were screwing people on fees or whatever, and I get like an $80 check for a whoopsie or whatever. So I mean, banks are not always. Yeah, it's really sad. They robbed us. They literally, man. It sounds like a Netflix show that I would watch. Whatever you're going through, and I'm sorry to hear that you're going through it. But hopefully, it comes with justified reward at the end of it, right? To if you were wronged, maybe they'll be able to make it right with a check. I don't know. I was away, and it was during FEMA while we evacuated for the hurricane. Crazy, man. I wish you the best, and like I said, I'll definitely crazy. I'll look up that gal, and then who knows what? Hey, if anybody else watching this knows a good real estate attorney in Florida, or good personal injury attorney, that would be willing to help this person out, definitely shout out any direction to point them in the right direction. But thank you so much for the likes, the follows. I'm normally on here from 10 a.m. till 11 a.m. Central, and I see we're past the 11 o'clock hour. You have a great day, sir. Talk soon. Yeah, absolutely. You as well, man. I feel for whatever the hell you went through there. It doesn't sound right at all. But I'd say last call for comments, last call for questions. Sel says, call the Bar Association for a referral. That's a great point. So if you look up the Florida Bar Association for lawyers, attorneys, and let them know briefly. And he says that he did and spoke with over 20 attorneys. Sounds like you're doing the right things. Keep going. Keep pushing. If you run into headwind, just like, when it comes to mortgages, when I talk to people where they say that they've been turned down before, and I'm like, don't let that pull the wind out of your sails, because a lot of times I talk with people that were denied and I'm able to get them approved. Same thing I would imagine happens in the legal world, where one lawyer is going to say, nope, for whatever reason. They don't want that case. It's not a good fit for them. Maybe they're too busy, whatever the reason. But there's another person out there that's thinking, man, I want this case for these reasons. Right. And so I don't know how they necessarily meet up, but, keep moving in that right direction. So hopefully that all works out well for you. And I appreciate all the comments, all the likes, the follows, the shares, all of that. So it's a year. I'm about to file DOJ. I'd say file that anyway. You can do both. Right. So I would definitely do that. But thank you guys so much for all the participation. And I will be back on here tomorrow, Thursday, and I think Friday as well. I know it's kind of tricky with the holidays, but like I was saying, I'm definitely not in the holiday spirit. This is just another week for me. So I'll be around. I might even be on the week of Christmas as well. So if you guys want to just hang out, it is what it is this year. Yeah, I appreciate that, Jessica. She knows. So it is what it is. I hope you guys are having a better season than I am. But, some seasons are up, some seasons are down. This one's just down, and, the next ones will be up. So that's all that is. And if I can be here to brighten up your day, if I'm able to help somebody, um, you know, just with a real estate attorney referral, or if I can help you answer any questions about mortgage or real estate, or if you want to just hang out, I'm here for it. So I appreciate you guys being here. I appreciate all the participation. It makes the hour just fly by. So I didn't even know that I was over the hour. But here we are. And so thank you guys for all that. I hope to see you again. Probably won't be popping onto my afternoon. So typically, just so you guys know, my schedule has been on a normal day, 10 a.m. and 4 p.m. Monday through Friday. And for this month, my co-host has kind of taken the month off because she is in the holiday spirit and she is busy with doing all the things that we should be doing right now. But, as far as me just kind of monologuing a show, I only really have about one of those in the tank every day. So if I find somebody else that wants to co-host with me, if you're a real estate agent, loan officer, appraiser, insurance agent, if you're in the industry at all, and you want to come on here, I'm happy to do another show in the afternoon. But or if you want to jump on in my morning show too, we can just have a conversation. That works too. Because I have a guy out in California, same deal. He's got, he's in the holiday spirit, whatever. So he's been on here pretty regularly to date. But yeah, I'm just kind of adjusting to what's going on here. And yeah, but that's it. I hope to see you guys tomorrow. Be well. Happy Wednesday, and make it a great day. Bye for now.